Hey everyone, it's Kimio here. Last week we talked about enterprise sales being chess, not checkers. Well, turns out some people have been playing with loaded dice this whole time. In this week's episode, we're diving into Southeast Asia's latest startup soap opera, E-Fishery, Indonesia's sustainable aquaculture darling that somehow turned $150 million in real revenue into $750 million on paper. That's five times more than um, the real number. And it's the math that would make even Elizabeth Holmes blush. Hint Tyrannos. This isn't just another founder gone rogue story. This is about an entire ecosystem that got so caught up in ESG hype and fake it till you make it culture that nobody thought to actually count the fish feeders. SoftBank and Temasek aren't exactly rookie investors, yet here we are asking about how due diligence became optional when the checks got bigger. And before you think this is just a Southeast Asian problem, from Vietnam's $12.5 billion real estate scandal to New York's fashion startups inflating revenue 30x, fraud has a universal playbook. But here's the heartbreaking thing about our region. The trust networks here are much tighter and they're more relationship based. When trust breaks, the damage spreads faster than a TikTok trend. And in a nascent ecosystem, still convincing conservative family offices that startups aren't Ponzi schemes, these scandals set us all back. Yeah, and so buckle up. We're talking about what happens when hype meets reality, when ESG stories become too good to question, and why the most important business advice is also the most uncomfortable. Verify, don't just trust. Even if it means driving around Java to count actual fish farms. Let's dig in.
All right, welcome back to Sea of Startups. I'm Kevin, and with me, as always, is Kim. This week, Southeast Asia served us a full startup soap opera. We've got tons of interesting things, spectacular scandal that's an ongoing saga. We've got surprising comeback, and the market's refusing to stay down despite some of the challenges. So, Kim, where do we even start with the chaos to unpack?
Ah, I mean, Kevin, it's like watching a really expensive reality show. Maybe the Kardashians, I don't know, where the stakes are actual billions. We've got fish farms with cookbooks, a Vietnamese gaming giant clawing back to respectability.
From fraud so blatant that it makes some of like the US Theranos and maybe even we can toss FTX or some of these other ones in there looking like they're kind of on par with that. So now we've got some recovery stories that maybe are restoring a little bit of faith in some of the fundamentals. We've got some interesting stories out there this week, so some good stuff for us to tackle into.
Yeah, and speaking of Tyrannos, it's a bit like Enron, but a Gen Z Enron scandal in a way, I guess, 25 years later. And here's what struck me. All of this mirrors patterns we have seen globally, but with distinctly Southeast Asian flavors this time. Very spicy, very distinctive, very different, and the trust dynamics here run deeper actually because it reflects the culture as well, and the fallout spreads differently, and the comebacks, well, they're more about quiet discipline than flashy PR.
Exactly. So I guess we need to buckle up and get ready for the ride because we're going to dive into what happens when all this hype meets reality, when trust starts getting weaponized, and when, sometimes maybe the good guys can win for once. So why don't we start the docket off with the train wreck? It's always good to kind of rip the band-aid off, start with the bad news, shall we?
Yeah, so Kevin, meet Gibran Huzaifa. He's the former CEO of E-Fishery, Indonesia's agri-tech darling. I'm not sure about it now, but valued at 1.4 billion, backed by SoftBank and Temasek. So they are smart fish feeders, marketplace for farmers. The whole sustainable impact story sounds really noble, right?
Yeah, I'm gonna make a guess here since we already know kind of the end game of this. It was not all rosy.
Yeah, it wasn't. No surprise there. But it gets good. Indonesian police detained Gibran and two executives in last month for fraud. And turns out they were running two sets of books. The real numbers, they reported 750 million in revenue to investors. In reality, five times less than that, 150 million. That's inflated by a lot. And that's not creative accounting. That's just, fiction writing. It's not great. It's not looking good at them.
Yeah, this is a tough one. So like, we gotta do the caveats. Like, we're
Yeah.
taking the numbers, the figures from what's being reported out into the news, not insiders. Maybe some of the numbers may end up being off. Don't come and sue us. We're just kind of like commenting
Yeah.
on what's actually out there. But like, so I'll tell you a couple of the things that really got me. So this is a massive inflation of revenue,
Mm.
assuming that everything is correct. And they got a liquidator there in place now. I think it's FTI Consulting came in. They basically did the cleanup of everything, and so a lot of the numbers that are being reported in the media of this, like, what is it, like 600 millions of inflated revenue. Basically, what
Mm.
is that, like 75%, 80% of their revenue is basically like smoke and mirrors. That's crazy. But the thing that gets me is like, this is an ongoing saga, so it hasn't actually just started. I think you probably read this as well, is that there was an interview that the same guy did,
Yeah.
and after the scandal, okay, there's a little bit of a delay in regards to seeing any action. The thing that got me, and I can't remember if it was Bloomberg or if it was one of the local media, but there was an interview somewhere where the guy, and in my opinion, reading it, seemed like an open confession.
Yeah.
Like,
Yeah. I think I got that one.
I don't know
Yeah.
if there's Miranda rights in some of these markets. The sort of like, you have the right to remain silent. Anything can be used against you, sort of like clauses. But it seemed like it was an admission of guilt, and then it took so long for now the police have detained him. It's crazy.
Yeah, it is, and it's just crazy how they would have the um dignities to face the public after all that. Like, how do you even face people? I can't do it, and
No, this one's tough, but like, to be honest with you, I don't know the person very well. We met one time at a conference. Probably
okay.
doesn't remember me. I barely remember the conversation myself, so it's not like I'm closely linked
Was it
with any of
fishy
these
though?
folks.
I had
But
to. I
like,
had to.
there is an aspect to where I don't think that a lot of founders go into things intentionally planning to defraud.
Yeah,
Um,
fair
what
point.
what I think that there's a number of culprits that end up coming into it, and like, I think part of it is the hype machine
Yeah.
of the startup and VC ecosystem, that is
Mm,
basically this sort of fake it till you make it mentality
yeah.
of kind of just juice the numbers, we'll figure it out. It's kind of the gambler's fallacy of like, just put the rosy spin on it. And that has a tendency of cycling down into this pressure of, just make it up. Just tell them you're doing better than you are. Get that next dollar in, and then you'll be able to fix it. And then
Yeah.
it just kind of spirals out of control because you never actually get out of that hole that you start digging yourself. And so I think that there's an aspect of this story where the blame, even though it's not direct fingerprints on it, the
Yeah.
ecosystem is partially at fault because they're feeding that ego and being like,
Yeah.
yay, congratulations, you're doing fantastic. So like,
Yeah.
if you're in their shoes,
Yeah.
and I'm not trying to say that like they did something wrong, so like, I'm
Yeah.
not trying to like say
Yeah.
no,
Yeah.
but if you're in their shoes and you're getting applauded, you're getting accolades, you're getting like heads of state and like big organizations all singing your praises, chasing you as if you're like the hottest thing
Yeah.
in the room.
Yeah.
What does that do to your psychology? Does it make you feel like, hey, well, you know, maybe it's okay?
it's easy to get sucked into that ecosystem, like to a point that you get this illusion about what you're doing. Like you said, fake it till you make it. Like how we watch on movies like Wolf of Wall Street. Imagine how he did it, and the more he did it, it was he gets so inflated, and he keeps him going, and more when he did that, he gets so far and detached from reality, and that's how I guess these things happen. So it's not only the part that the founder is doing a great job at what he did at the beginning, but because of the environment kind of promotes compounds on it, and it made it worse. And I think on top of that, it's also another kicker. This worked for years because of there's one of the news pieces that one analyst called it the ESG halo effect, because they're doing
Yeah.
sustainably focused stuff. So there's this effect as well, whereby investors wanted the impact story to be true so badly that they forgot to count the actual fish feeders. And actually, how many fish feeders do they actually have? And well, there's a thing that said, well, we have 24,000, but let's just multiply by 17 and see if anyone notices. Like, no big deal, NBD, let's just do it, and no one knows. But it takes it some time for people to actually find out, and then once it implodes, it's like boom, it goes everywhere, and it's a big hoo ha again. And I guess that's the thing about halos, and they blind you to what's right in front of your face. And but then again, my next question would be, from the environment perspective, right? So SoftBank and Temasek aren't exactly rookie investors. So how did that happen then?
That's a good question, and I can't speak to them specifically. There's definitely a question in regards to like the due diligence that
Yeah,
goes into the larger checks. If you're the person that came in at the seed round or like the Series A round, the
mm,
likelihood that you're gonna like rent a car in Java and start driving around and trying to visit some of these fisheries to like
yeah,
validate it is probably unlikely.
yeah,
But I used to do late stage and I used to do distressed where like everything is just messed up. And one of the key things was doing site visits, doing customer
yeah,
calls, going out and physically seeing things in order to validate it. And that's kind of like standard protocol
yeah,
in a lot of situations. And so it does raise the question of what happened to the practices and procedures. Was there an instance of, hey, follow the leader? Because that happens
yeah,
in deals. Like when you get like a really good name that people respect, that's leading the round or like has some weight in the game, you'll oftentimes come around and be like, well, it's pre-validated because this person's there and
yeah,
I've got a lot of respect for them. I don't want to show bad faith by questioning whether or not they actually did their due diligence. There's possibility perhaps that some of that is
yeah,
there. I don't think that's truly valid because I'm not like I'll follow rounds, but I'm not going to follow another person's effort. At least from my standpoint, because like I don't know their thought process. I don't know their work. I don't know whether or not they miss something. And so I do think that there's like blinders that probably got put on, and it's not the first time. There's tons of scandals that have happened out in the ecosystem, and unfortunately there's an aspect of when the stakes are high, when the dollar values are high, it's the incentives skew, and we
mm,
inevitably get some of this bad behavior, which
yeah,
is why we can't really rest on skipping the protocols and procedures of like, is it real, is it not?
yeah,
Let's take a look. How many fisheries are there? Like, let's rent a car, let's take a week or two or a couple. If you're getting ready to put, and I can't remember the investment dollars, but like I'm just going to make up a number. If you're one of the investors and you're going to plop down $50 million, spending 5,000 to
yeah,
like take a week road trip
yeah,
and like explore the beautiful island of Java and maybe have like a once in a lifetime experience traveling between super rural areas. Probably not the worst thing in the world, especially if it's going to help safeguard that money.
yeah, and reputation as well.
Yeah, yeah, but like peak ZERP hype era startup land,
Yeah,
it's like the what's for people listening on Spotify, they're not going to see me doing like the hand motion of just like
yeah,
throwing the dollar bills in the air.
yeah,
But it kind of felt like in many instances, and it's not unique to here. Like It
It's not.
happens.
No.
Similar scandals happen in the U.S. and India. Similar scandals happen anywhere there's a startup ecosystem. So I don't want to be like, this is a unique thing that's only ever happened here.
Yeah.
Uh, it just sucks that our ecosystem is so nascent.
Yeah.
And actually, there's probably a lot more of these that are smaller
Yeah.
that haven't hit the headlines.
Yeah. I think it's more prominent. It's more impactful when it's in the VC industry because compared to other industries, they're more regulated. And VC is very based on hype, and it's also based on the environment. It's also based on the pitch. And when pitch comes, it means that how can you present it, and how can you present it also means fake it till you make it. It's very much based on it's feeding off people's ego as well. To be blatantly honest, but
Mm.
that's the reality of it. I mean, it feeds on that, and then you have Tyrannos. You have so many of this that happened, and it's based on one founder. And because of that founder who got a bit disillusioned, and then these things tend to implode. And when these things implode again, there's that always, oh, we should really regulate it. And but then it never. I don't know whether it happens or not. Maybe it's not as regulated as I think it should be. But
I would take a different view than the regulation.
yeah,
So I wouldn't necessarily like criminal action should be criminal action. Like
mm,
it baffles my mind that it took so long from like
mm.
an interview that seemed like a blatant admission of guilt to
He was
actual action. But
yeah,
like maybe they're having to build up like instead of just going off the interview, maybe they needed the actual paper documentation, the trail. Maybe there was work behind the scenes of why there was a delay because they wanted like a solid case. I don't know the procedures
yeah,
for the police or courts there, but instead of regulation, I feel like a lot of these happen when investors start slacking, when
mm,
they stop putting in the work
mm-hmm.
to verify, validate. We're naturally in environments of asymmetric information and
Yeah,
oftentimes with unavailable information. In the super early days, I can understand much more. When it gets to the later days, where the check sizes are much bigger, when the track record has been longer, when the different data points that you could actually go out and validate are more numerable, then I think that there's less of a justification other than your pile of cash is just so big that this is too small of a check to matter. And maybe for somebody that's managing like such massive amounts of hundreds of billions or tens of billions or whatever their cash pile is, it was surrounding air that they don't really care about in
yeah,
regards to like putting in that amount of effort. But the other thing that really gets me on this is Southeast Asia's ecosystem is still nascent, and the available capital in the ecosystem is still restricted because by and large the vast majority of folks are very, very conservative with their
mm,
capital. When you
mm,
go around to high net worths around the region, family offices, etc., they generally do not get into startup ecosystem. They're very risk averse. It's real estate, it's credit funds, it's fixed deposits, it's like black and white, straight and narrow, traditional asset, all the way down the road. And things like this, because it's not really the asset class, it's not a problem of the asset class. It's a
yeah,
problem of the strategy, and it's a fault. It's a partial fault of the investors
yeah,
that were there. They didn't do
yeah,
their job, in my
yeah,
opinion.
yeah,
And because of that, the rest of the VC ecosystem ends up suffering because a lot of the other high net worth individuals, they see the scandal and they start saying to each other, see, I told you so. Glad that I never got into it. And that's a problem because it's not endemic. It's not systemic
yeah,
to the asset class.
yeah,
It's when people stop doing the work that this is more common. It
yeah,
happens in smaller denominations. Like the natural course of things is not every company succeeds.
yeah,
But these massive blowups happen more often when people just drop the ball and aren't paying attention because they're caught up in the hype, whether it's the ESG story, whether it's the ZERP zero interest rate, like hype bubble of just let's throw money at people because it's free and easy, and it damages the ecosystem.
yeah. And here's what's fascinating. It's not just one bad actor. It's the entire investment culture, that paradise narrative over numbers. That's it. And the consequences, they ripple through every pitch deck, every due diligence process, every startup conversation happening right now. So it's like a total wipeout, right? Like just we just need one in a way black ship, and then it wipes out the entire thing. And
Yeah.
and when you have big names like them who aren't rookie investors, and you said and they're leading it, that's when people slack because they really have these big names, and it's like, oh, you've done the work, I guess I don't have to. And you know what this reminds me of? Dating. You know, when someone tells you exactly who they are, but you're so invested in who you want them to be that you ignore all the red flags. Except here, the red flags are worth 600 million, so it's a very expensive red flag to begin with.
Yeah, yeah, we could extend that dating analogy and extend it to fisheries because they literally got catfished.
Yeah, there you go. It's a fishy situation. It's a fishy situation. I just had to say
Yeah,
that.
yeah, yeah. I had to do that connection. Yeah, yeah,
It's a good one though.
yeah, 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 yeah.
Yeah, yeah, and
But
I
I
think
mean, this ecosystem operates on trust, and once it's lost for good, and like
yeah,
it's very hard to earn that back. And like again, coming back to the impact on the ecosystem is the large capital providers that were in this likely are going to have no trouble raising subsequent money. It's the
yeah,
trickle down impact across the lower layers through the ecosystem, the folks that are doing B rounds, A rounds, pre-A, seed, pre-seed. It's those folks that rely more so on the high net worths and the family offices that are going to be the most impacted, and
yeah,
there's unfortunately some damage because other investors drop the ball.
yeah, no doubt. And it's gonna take years and years to repair for a while. And short of saying, it's like virginity. I mean, you only lose it once, and everyone remembers. So. Let's see. And given how Southeast Asia, like you said, is so nascent, I'm not sure how long this will take to repair, and how it will affect in terms of will it prolong the venture winter? I remain skeptical about that.
E-Fishery isn't the exclusive party that's committing frauds. Like we've got them all over the place, as we talked about, because like there's kind of a fraud universal playbook in a sense. Yeah.
Yeah, yeah, it is. So let's look at Vietnam. Strong Milan, real
Oh
estate tech
man.
tycoon. Yep, convicted of 12.5 billion fraud. Vietnam's biggest ever. And she basically turned a private bank into a personal ATM through shell companies.
Yeah, that one was crazy if the stories are accurate in regards to like wheelbarrows of cash and like
Yeah.
some of like the crazy stories there, and like just the sheer percent of GDP that
Mm-hmm.
this scandal occupies, which is like
Yep.
wow. But
Yeah.
what was it? What was the punishment? Well, if assume an e-fishery has any similarity into consequences of Vietnam, what did she get?
She death sentence.
Bum
I
bum
mean, Vietnam.
bum.
Yep, Vietnam literally gave her the death penalty of white collar crime, and that's sending a message you can hear from space.
Yeah, yeah. So, note to self, do not commit any sort of financial fraud in Vietnam. You shouldn't commit it anywhere, but sounds
Yeah.
like Vietnam's quite harsh. But they did have, I know there was a caveat to that story because you could essentially buy your way out of the death penalty.
Oh,
If
really?
you were able to return some cash, and I don't remember the specifics of it, but I remember reading because like when that penalty came down,
Yeah.
there was these stories about reaching out to a bunch of different financiers because she had a lot of personal assets that were kind of shielded from some of the
Huh.
fraud, and so
Uh-huh.
then started to try and liquidate portfolios to try and buy her life back.
Wow.
I could be
She's smart.
misremembering, so like
Yeah.
maybe we'll have to hit the edit button a little bit later.
Yeah.
But I'm pretty sure there was something in there about like if you could return funds. So like let me rephrase it so it doesn't sound like buy your life back. Although
Yeah.
like
Okay.
it is to an extent. It's more of
Yeah.
like reimbursement. Like
Yeah.
if you can recoup the losses because of the fraud, then the
Yeah.
penalty is less harsh.
Yeah, that's a smart way of doing it. I mean, I'm gonna give it to her. It's a very creative way of trying to reimburse yourself back. Yeah,
I don't think she was ever able to come up with that money. Like who's gonna underwrite that that
yeah,
one? That's a lot of money.
yeah,
Uh,
yeah. But it's. I mean, the thought of even doing that, there's an intention there. So I give her that. At this point, anything works, right? You just gotta do everything that get you your life back. And then there's Castle in US, fashion rental startup founder Christine Hunziker raised 300 million by claiming 440 million in revenue. Actual revenue, 15.7 million. That's times 25 times. She even forged botched signatures to raise more money. It's crazy.
yeah. So I mean, if you're gonna lie, commit to the lie, I guess. So like, if you're gonna commit the fraud, you might as well commit. Like, you can't really half-ass your fraud, your white collar crime.
Yeah, and
Not
here's
really
what
the
gets
moral of the story that I would be hoping to take out of it.
true, but this is what gets me. Like every one of these cases, even from the case of Tyrannos and all Enron, even if we go back all the way back then, they follow the same pattern. You have charismatic founders, you have compelling mission, inflated metrics, and investors who wanted to believe so badly, they forgot to verify. That's when they really have their walls down and things start to happen. And it's like we are hardwired to fall for the same con, just with different window dressing, which is so true. That's why window shopping works.
So what do you say the common thread is that leads to all these crumbles?
Governance failure every time. Whether it's fish, whether it's fishy, whether it's fish in Indonesia, real estate in Vietnam, or fashion tech in New York, or even like the case of Tyrannos. The moment you stop asking uncomfortable questions, you're already halfway to getting burned. That's all there is. I mean, that's why I find it like, where do you exactly draw the line of being your authentic self and really putting it, faking it to make it? Because some parts, to get what you want, you kind of have to inflate it a bit. I'm not saying all the time, but you kind of have to put it out there. But then again, authenticity is pretty much the buzzword is overused right now. And how do you draw that line? It comes down to that again. What are your values? What are they like? What's your authenticity like? Do they really align with your bigger picture?
Mm.
If not, then what? That's also another question of going deep into the founder themselves as to where they are, like how strongly they hold these values. Because if they do, then perhaps they will be more stubborn, I guess, in a way to uphold their own values, or rather walk their talk. Not stubborn. Stubborn's not the right word. Sorry. Yeah.
Yeah, yeah, yeah. No, I mean, we talked about how frauds happen globally. Like,
Yeah.
there's tons of scandals that have happened every single inch of the globe, anywhere where there's a startup ecosystem, and it happens, as you said. Governance failures are generally the common thread across it. But let me ask you, because from a cultural standpoint, in regards to Southeast Asia specifically, when you think of these failures, when you think of these breakdowns in trust and these fraudulent activities, how does this play out in Southeast Asia? Is there a different flavor because of the culture of Southeast Asia relative to, say, the US or otherwise?
You lost me at
My question is more of like, I don't want to be the white guy saying, hey, this is
yeah.
how Southeast Asia is reacting to it. So like,
Yeah.
I'm just asking, from a cultural context, is there a different flavor to the reaction
Oh.
to these sort of frauds, breakdown in trust?
I think generally, like from where I stand, Southeast Asia, it's very conservative. Then again, it's like, um, cannot lah, I cannot go into that again lah. See, so dangerous. That would be the common denominator that a lot of people will keep saying, because VC as well. Yes, it is boom, but in terms of its growth, it's still pretty much stuck at certain booms. It's not like
Mm,
the states whereby it's going all out, whereby so many startups or pre-seed or seed stage to get funded so much easier compared to in Southeast Asia. Southeast Asia is like, yeah, we'll wait and see. It's a very trust
yeah.
focused. So relation is very relationship based, and I say it in a sense that you have to build that relationship, not under the table relationship, just putting out there. So it's a lot on that we have to cultivate. So it takes longer for investments to go through, and once trust is broken, it's very hard to earn that back. And again, when you're to a certain extent dealing with Asians, I can't speak for all. Don't come at me again, but as a person, it takes it very hard for me to rebuild that again. So coming from that point, safe
Yeah.
to say some of us we do share the same sentiment. But I think this applies to the whole, human race. That once trust
Yeah,
is
yeah.
broken, it's very hard to build up.
That's very true.
Yeah,
I do think in the States that there's an easier bounce back. You
yeah,
know, like Adam Newman raised money again from
yeah.
the same
Mm-hmm.
investors
Mm-hmm.
that like they crashed in spectacular failure. He got his own
Yeah,
TV show made out of the story,
yeah. On
and he
Apple
still got
TV,
funded again. I don't see that ever
exactly.
happening
No,
in an Asia market.
it's like in
But
Asia. Yeah,
yeah, but there is one data point.
yeah,
If there's any data nerds listening into this that like
yeah,
want to try and like dig out and create this number, I would
yeah.
love to see scandals relative to successes, the number of scandals that have happened relative to the number of successes,
Ooh,
and
this could
like
be another
put
one.
that
Yeah,
as a ratio. Because like, is it the aspect that because in the US there's just so many success cases that these
yeah,
handful of like FTX and Theranos and these ones that we've talked about, that they're just like such a small portion
yeah,
relative to these massive successes and a lot of these exits. Like
yeah.
Figma just went public. Like
Mm-hmm.
there's already these news stories of like investors making almost 2000x their money,
Yep,
like billions in profit dollars. Like
yep,
the carried interest alone creates a billionaire. We don't
yep.
have those success cases in
No,
Southeast Asia.
no.
So it would be interesting to see a data point around, and maybe even factoring in dollar value of the scandals relative to the dollar value of the successful outcomes. Have we made
Mm.
more money than we've been defrauded of?
Yeah, it kind of gives you a different spin and different perspective
It would
about.
be interesting
Yeah,
to see some of those numbers. Like,
yeah.
we need to talk to like somebody that's a little bit more resourced and access to some of this info to see whether
Yeah.
or not we can get one of these news outlets to jump on that.
Well, I guess it'd be helpful if we could speak to journalists to a certain extent. But getting journalists help, I just saw an article this morning on LinkedIn about how journalists themselves get burned even when they're trying to get the truth out of it, and they
Yeah,
get burned by
I
the
saw the same.
startups.
I saw the same. That's why I did the
Yeah,
disclaimer at the beginning. I was like, we're just reporting, we're just
yeah,
doing commentary on
yeah,
what we read in the newspaper. We're
yeah,
making no
yeah,
claims that any of
yeah.
this is fact based or that you
Hmm.
should be making any decisions on this. So please do not send me a cease and desist order.
Yeah, exactly. And again, you're kind of in some ways. I feel like you're kind of putting our lives on on the line as well, right? Like saying all these things, but you just never know because some people can just take it and spin it another way and get us into trouble. I don't know. I'm just putting it out there again too. So there's one too, and I think that could be a potential episode follow up. Honestly, it'd be quite interesting to see that.
That data point, I would love to just kind of riff on that, because
Yeah,
I would imagine that the relative percent of scandals to successes in the US is quite
yeah,
small. Whereas I would imagine that the relative portion of scandals in dollar
mm,
value terms, especially, is
mm,
high relative to the exit values that
yeah,
we've seen in success cases. And I think that's a challenge in a nascent ecosystem, because again, it's breaking these trusts when we need to bring more high net worths into the circle and not scaring them off.
that's a good one. Yeah, totally. We'll definitely
Mm,
sit on that and think
mm.
about it and do it. But the thing is, there's a bit of a shift right now. What's happening on the other end of the world, whereby, with the AI coming really fast, maybe to put it in very straightforward, like Mark Zuckerberg, he's investing in individuals instead of companies. Like he tried to buy over OpenAI's Mira for 1.5 billion, and she said no. So I'm not sure will that ever ripple to this end, because we do have a few pretty good outstanding people who are doing things here, and it's like people are buying over people over there. But I see that trend going as well, and it's so fast, things are happening there whereby people are buying over each other. It's like, oh my gosh. And here's like we're still trying to make it work with trust. What's your view?
Yeah, so like the US ecosystem operates on just kind of different math, right? And
Yeah.
like it's a much more mature ecosystem. And it is true. I mean, there's when you trace it back from the end scenario, when you start talking about liquidity the availability of public markets, the activity of M&A, all of that, it creates a different dynamic in regards to the startup environment. But
Yep.
then when you layer on some of the regulatory aspects of it, you get some of these funky things that happen in regards to how acquisitions are done. Because
Mm.
like the massive players, your Google, your Meta, these sort of companies, they're under such a microscope. Like
Mm.
the reason why Figma went public is because the Adobe acquisition went bust because they couldn't get it through. Now, mind you, the stock did a big pop, but like maybe that's just hype again because
Yeah.
the first time like a super well-known great company. But is it above where its value ought to be? Is it going to take a few years to actually grow into that? Great company,
Mm.
by the way, phenomenal company. There's just a completely different dynamic there, and we just haven't gotten there. You can kind of look in the interim steps of where we'll go through.
Mm.
Maybe it'll be a little bit more like the way the India market has developed. Maybe it'll be a little bit more like the China market has developed. There's not just like one flavor in regards to the way it goes. There's like there's a rhyme to it, but there's not a replication. And so somehow I think we need to figure out how to navigate the path. But breaking of trust is problematic, especially in markets that are high trust environments. What's the researcher that did all those like cultural factors of like power distance, trust
Mm. Mm.
factor, all of those sort
Um,
of things. Like Asia's
yeah.
very high on power distance and very high
Yeah.
on trust factor. And so like maybe there was an aspect of don't question the boss, like no
Yep.
whistleblower because don't question the boss. Boss
Yep.
knows.
Yep. Yep. Yep.
Um,
Right.
and then you get into the trust side of things, and like, so there's a very high risk aversion because of the necessity of it. There's a very different risk culture. And so it is a completely different environment. But again, I kind of circle back to this. We need more participants in the startup investment space. We need to be encouraging people to come into the fold. Those high net
Yeah.
worth individuals that are sitting on massive fixed deposits earning 2%, getting a negative real rate of return because inflation is always above what the rate of return is, but they still love seeing that pile there. We
Yeah.
need those people to put it in something that is a high risk asset class, but
Yeah.
it's not a sure failure. You're not gonna like if you run a portfolio strategy, if you put in the work, you have the ability to actually get great rates of return, and we need that innovation because like with AI as well, the barrier the I was talking about this just the other day. The barriers to entry across global markets is going to start decreasing because one of the things that Southeast Asia has is that the go to market is very nuanced because
Yep.
it's not homogenous. There's a lot of nuance. But you know what AI is getting much better at is filling in all of those personal touch sort of
Yep.
roles.
Yep.
Incredible chatbots, voice bots that are getting better and better and better. And if
Yep.
they're this good today, how are they going to be in 1 year, 2 year? And
Mm-hmm.
so if we're
Mm-hmm.
not building, if we're not advancing our startup ecosystem, we have the risk of being left behind. And in order to advance, we also need the capital. So by shooting ourselves in the foot with all of these scandals, okay, that's my soapbox. Sorry, I did my rant. I know we only have a few minutes left, so we've got some other things on the docket, but maybe we can push that to another week. Maybe
Yeah.
we can jump in and we can talk about some lessons learned and do our wrap up.
Okay. So let's take a step back. So everything we discussed today, fraud, these aren't just Southeast Asian stories. They are universal human patterns playing out with regional characteristics. So we have like fraud is borderless. Why? Because we have E-Fishery, and then we have on the other end of the world Tyrannos, and we have Castle, we have Enron, different products, same playbook, charismatic founders, compelling missions, inflated metrics, and investors who forgot to verify. And the comebacks also universal. And the regional differences, well, let me, trust networks in Asia are tighter, more relationship based, and when trust breaks, the damage spreads faster, like COVID, because everyone knows everyone. And when rebuilt through demonstrated integrity, it also compounds more powerfully. So I think it's both extremes, I said.
Mhm.
And You want to spread some business.
Yeah, I mean the stakes are high. You know,
Yeah.
when you have these scenarios, and there's spectacular falls, but we do have the ability for some comebacks. We
Yeah.
didn't get a chance to get into some of these stories, but like we'll circle back to some of the positive side of things
Yeah.
coming back. It's like a lot of this is like going through your bad breakups. We're going through these difficult times where you're no longer you're a little bit jaded. You're no longer falling for the pickup lines, the cute face, all of that. You start appreciating more of like the little things, and we need to do the work. We need to like
Yeah.
actually not just
Heal
be
ourselves.
swiping left and right, and we
Yeah.
actually need to like get
You
a little bit
gotta.
more into it. Sorry, try to personalize the life lessons there.
No, but to a certain extent, we gotta heal ourselves first. You gotta look within.
Mm.
Not get a bit philosophical, but that's just life, right? I really committed to this dating analogies today. Like human behavior is human behavior. Whether it's romance or venture capital. Let's put it that way. I'm just gonna put it out there. But then, there's something profound here. In the world of fake news, fabricated metrics, and manufactured authenticity, maybe what we're really craving in business and life is pure basic honesty, the courage to say, hey, this is where we really are, this is what we actually achieve, and here's what we're going to do next. If you really go down to the depths of it, that's the real disruption, radical transparency in an age of creative storytelling where hype versus reality is when hype wins, really.
That would be nice just to like say it as it is. Don't get caught
mm
up in having to
mm
sugarcoat everything. And
mm
like I can tell you from my perspective, dealing with portfolio companies and as an investor, like give me the good, bad, and the ugly. I
yeah,
can take it. You know, like
yeah,
what doesn't kill you makes you stronger. So like let's actually talk through the warts and all of that, and like
yeah.
if there's no problems, then I realize that that's the problem, because clearly you're not telling me everything, because there's every company has 1,000 problems.
So, what's the takeaway for our listeners on top of that? Whether you're a founder, an investor, or just someone trying to navigate a world full of polished narratives and hidden agendas?
Do the work, verify. Don't just trust. You shouldn't be like doing this follow the leader. You can follow somebody, but like you gotta verify. Don't just trust. No matter how compelling that story, how impressive the backers are, or noble the mission sounds, you gotta go out and count the fish feeders.
Yeah, and when you mess up, own it completely and focus on fixing it rather than explaining it away. And, the market might forgive a lot of things, but it never forgives being lied to. And at this point, authenticity isn't just a nice to have anymore. It's a competitive advantage. I can't stress it any further. The more in line you are with your inner self, the easier it is to move around because you hold your values true to yourself. And that stands out to me, even as a person. And I guess, here's my personal takeaway, whether it's a startup, a relationship, I guess your relationship in this mix now, or just your daily life, the people who consistently tell the truth, especially when it's uncomfortable. I think that's the other ones that you want to bet on long term.
Yeah, I couldn't agree more. I mean, as we know, trust builds slowly, it breaks faster, it compounds beautifully when it's growing. But like I said, when it breaks spectacularly. So manage your reputation, choose your reputation carefully, and act accordingly.
And that's our show. Southeast Asia keeps reminding us that behind all the numbers and narratives are very human stories about character, choices, and consequences. So the three C's, not Singapore's five C's.
Yeah, we've still got some work to do in the region, but
Yeah.
we'll tackle some more of the stories in the next week.
Yeah. Till then, we're just gonna keep it real. And again, remember, verify, don't just trust. And maybe, just maybe, we just gotta root for the quiet ones who underpromise and overdeliver.
There we go.
Yep. And that's a wrap. If that didn't give you existential crisis about trust and due diligence, I guess you weren't paying any attention. So what are Kevin and I just unpacked? A masterclass in how entire ecosystems get drunk on their own narratives. E-Fishery wasn't just one bad founder. It was investors chasing ESG halos so hard they forgot basic math. A culture that rewarded storytelling over spreadsheets. Verify. Don't just trust. And that applies to no matter how compelling the ESG story or impressive the beggars are. In the next episode, Chi Wang, one of the most well-rounded humans have met actually in Asian tech. He's helped founders scale across Hong Kong and Singapore, worked inside Huawei, former student of NYU and Tsinghua, and somehow finds time for biohacking. After everything we discussed about trust, Chi represents something different, less spectacle, more substance, less hype, and more heavy lifting. I'm Kim Yo, and this is the Sea of Startups. In a world of polished narratives, radical transparency isn't nice to have. It's survival. See you in the next one.